From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Happy Friday.
Happy Friday to you and to you. If you're watching or listening, this is the COB and I'm Nadine Blaney.
I'm Juliette Sarli. We made it to another week. Hard to believe we're halfway through November. Pretty good day on the market despite that weak lead coming through from Wall Street. We have finished pretty flash over the course of the week though, and that was mainly due to the falls that we saw on Wednesday.
Well, and you know, we continue to watch with a wary eye to what's happening with iron ore. Today we did see iron ore faltering yet again, so heading for a weekly loss. However, I don't know why I'm being a Debbie Downer when you look at what the market has done today. Not too shabby at all. That's the CIBO Australia Index. The S&P ASX 200 up by 0.7% as the last of the day's trades go through. And interesting to note that we've got E-minis in the US under a bit of pressure right now.
Yep, and let's have a look at the overall themes of the day as well. A big boost from the banks today. So we mentioned Wall Street was lower, but our banks looked really, really solid, and that helped the overall index lift when you've got heavyweight CBA doing well. I think at 1.155, hard to believe it just continues.
Yeah, and proving to be a counterbalance to CSL, which was down at one point about 3%. Why? Well, because of who has been named head of U.S. health, being RFK. And so, there are a bit of concerns over there as to what that might mean. Anyways, one of the other key themes today, Juliette, is that we had that data dump coming from China. So you get a lot of that data coming at once. And retail sales actually looking pretty good. Yeah,
beating expectations, growing at the fastest pace since February. Industrial output, though, disappointed. So showing, I guess, a little bit of an uneven effort from that stimulus effort, but some sort of stabilization showing through in the economy.
Well, I had a great chat with Ada Chan from Pendle earlier this week, and she was talking about the Chinese consumer and how the stimulus is going to be targeted to the Chinese consumer. She's really bullish on the Chinese consumer, part and parcel, because a bit of nationalism, as we talked about yesterday, creeping in there. So interesting to see that coming through in the retail sales data.
4.8% gain in October from a year ago. And then we're looking ahead, of course, always. NVIDIA next. That is going to be the key one for next week when NVIDIA comes through with its third quarter earnings.
So after this week, after the quarterly coming through from CBA, we do have a lot of information from the big banks. I will say I hosted the call today. Obviously, these are the big guys on your screen. ANZ up by 1.8%, Westpac 1.6%, although the Macquarie Group did fall by 0.4%. And Bendigo and Adelaide Bank was one of the picks from our viewers. Yeah. And oh boy, my guests were not too positive on the regionals. It was a sell for both the guests.
All right, quick look at the energy stocks. We did see oil gain overnight, all looking mostly positive. Strike Energy there down by 1.1%.
Now, what's next? Here we go, the healthcare space, and there's CSL. So it looks like it'll finish the day down by about 2.6%, 277.26. Adam Dawes from Shaw and Partner said, you know, he buys for his clients around these levels. He reckons, so you could see some further falls there. Still, Ansell bucking that trend up by about 0.2%.
And a quick look at some of the corporate stories. We do have Lendlease in focus. They have announced a potential $500 million share buyback in the near term, they say, provided they can sell certain assets. One of the best performers today.
Yeah, okay. And also APA Group lifting the wider utilities sector after it maintained its FY guidance of earnings, and it reported revenue of 256 roundabout million in the first quarter, up from 237 million in the prior quarter.
And the other interesting thing was the Sohn conference continuing in Adelaide. So we had Perpetual and Corporate Travel Management shares jumping. So Elliston Capital Director Chris Cortis picking Perpetual. I believe he came out in a lab coat.
He did. It's on the front page of the film.
And IFM Investors Ricky Bannon naming Corporate Travel. Now, I just had a producer ask me why this is important. Well, remember last year Ricky Bannon picked Telix Pharmaceuticals. It went up 150% after, well, not after her call, but it went up 150% since then.
So her call was very, very right. We've had Ricky Bannon on the program before. I'll give her a call to see if we can get her back. Now we do have Findi as well. So this was the stock of the day on the call, advising of an acquisition in India. So investors, pushing that stock 10% higher today to $7.48.
All right, let's welcome to the COB our Friday guest, Shane Oliver from AMP. Good to see you. So certainly, I guess the Trump trade in full swing, but potentially the shockwave of that we've moved past. We're looking now to what it means more broadly. And you're saying potential tariffs unlikely to move the needle too much for Australia?
Well, not directly. There's been a lot of debate about that. And then some say, oh, well, don't worry about it because only 4% of our exports go to the US. And like last time, we'll probably be exempted because we have a trade deficit with the US, or they have a trade surplus with us. And I tend to think that's probably correct, but it doesn't mean it's not a worry because we could be indirectly impacted because of the prospect of a trade war. So the indications from both China and Europe are that this time around they will be better prepared than they were back in 2018, and they will respond to any moves by Trump a lot more aggressively. And of course, if you have a trade war with US putting tariffs on China and other countries, and then those other countries responding quickly, then you could see a decline in global trade, which of course would be bad in terms of demand for our exports as global economic activity gets hit. So it doesn't mean there's no reason to concern. I think it's just that we're probably not going to be directly impacted, but we will be indirectly impacted if that trade war gets underway.
What do you make of Jerome Powell's commentary this morning? Does it come as any surprise when you look at the data that's been coming through in the US?
Well, not really. He did make similar comments last week, I think it was, when they cut interest rates again, except that he chose to emphasise the more hawkish aspects of those comments, particularly around strong economic activity, meaning there's no reason to hurry on interest rates. So I think he probably was responding to the inflation numbers, which had come in a little bit on the elevated side for October, both the CPI and the PPI. So I think that's what he's probably responding to. I don't think it necessarily means they're not going to cut in December. I tend to think they probably still will, but it does warn that we may see a more gradual process as we go through next year. The other aspect is that it seems every so often we go through a bit of an inflation scare. We saw it earlier this year in the US. The market was initially looking at 5-6 rate cuts in America. Then that was wound back to 1 or possibly 2 at most, and some talking about 0. And that was a period where the downwards progress on inflation sort of stalled. Then, of course, it picked up again. Now we're seeing another stalling. When you look at the core numbers, odds are it'll pick up again. But you probably do have to be a bit wary here. You can't assume that the Fed's just going to keep cutting at every single meeting. I think we have to allow that they're going to skip a few. I think they probably will cut in December, as I indicated, but I think they'll probably signal a more gradual approach as we go through next year.
Well, Trump would be very angry, I think, if they didn't cut next
month. Let's have a look at, when you talk about inflation, what we're seeing here with inflation, because we had the wage price index this week too, and you've given us an interesting chart about inflation versus wages, and making a really interesting point that perhaps the cost of living crisis could hurt Albanese and Labor in the same way it cost Harris and Democrats potentially the election.
Well, I think that's right. I know a lot of people in Australia are distraught at what's happened in the US. 70% of Australia, or polls show that 70% of Australians would have voted for Harris, 30% or less would have voted for Trump. And so there's a lot of concern about that. But I think when people vote, they're often thinking about their hip pocket nerve, which was the old saying. To be honest with you, I don't keep my wallet in my hip pocket, so I know it's an old sexist saying to some degree, because most women don't keep their wallets in their hip pockets either, or even have a wallet. But that was a saying that my father used to refer to, that people vote according to the hip pocket nerve. That's what happened in the US. When your financial conditions are seen to be strong, you think more expansively. You think about equality, you think about world peace, you think about the environment. But when you've got these cost of living pressures, as we've seen in the US, you could do a very similar graph like that for the US. People tend to vote on the basis of that. And of course, they hold their nose, and in this case voted for Donald Trump because they felt that he might be better in improving their real wages or getting cost increases down relative to their wages. So I think that's what happened over there. I don't think we should get too negative about people suddenly giving up on diversity and equity and all those sorts of things. I don't think they have. But you can apply the exact same analysis to Australia. And it seems to me that governments around the world gave priority to preserving a lot of the gains on employment, preventing unemployment rising too quickly. And that has led to a situation where it's taken longer, arguably, to get inflation down. And of course, voters are not rewarding them for that, because the reality is that more voters are affected by high inflation and cost of living pressures than are affected by higher unemployment. And it's the exact same story in Australia. So there is a risk in there for the Albanese Labor government. That chart showed that over the period since 2020, you can do the same analysis since Albanese came in, although it's not quite as dramatic because inflation did start to pick up before they came in. But it basically shows that prices have gone up by 19% over the last 3, almost 4 years, and wages have gone up by 13%. So there's a 6% gap. So even though right now wages growth is 3.5%, and that is above the rate of inflation, real wages are actually rising. It's not making up for the gap seen over the last 4 years, and that's why people still feel that they're under pressure, even though it's perhaps not getting any worse. But it hasn't made up for that gap yet. So that, I think, is a big problem politically in Australia, just as it was in the US.
Yeah, I like that chart, Shane, but I liked the little video that you and your team put on LinkedIn even better to talk about wages. If you haven't seen it, you should go seek it out. Quite the debate you've got there,
Has
Shane.
Home and Away called you, Shane? Are you going to be joining, what's his name, Alf in the diner with those acting skills?
I might have to. I think all three of us might have to. I could just prove here that my wallet is in my front pocket. I don't put it there; it is in the front pocket. But in any case, I never put it in the hip pocket because it falls out of the hip pocket, and I actually buy suits these days that never have a hip pocket. But I think the problem with all those videos we do is that some people think that I'm serious. When I said to Diana or me that they're complaining about the cost of living, I said that's not my problem. I mean, that's the sort of thing a mean boss might say. Shane, the real Shane Oliver wouldn't have pushed me that negative.
No, never. We know that. All right, so let's just talk shares, shall we? This market looks like it'll be closing down the 5 trading days, about 0.1%. What do you make of it?
Well, it's been interesting, hasn't it? I mean, initially shares rallied dramatically, including in Australia, on the back of Trump. And then as the time's gone by, markets have become a bit more reflective, I guess. US share market is still up, although it's down this week a little bit, but it's still held on to most of its gains. European share market, despite a huge rally last night, never really took off that much. And our market had an initial bounce and then sort of wallowed a little bit. So I think what's happening here is that the US investors are thinking, Trump's unambiguously positive, at least for now, for US shares. There are those nagging worries about the rise in the bond yield affecting valuations. But in Australia, investors are sort of a lot more concerned that you start whacking on tariffs, then that's going to be a drag on our market. And then there's the other side to it that maybe some of his policies will mean the Reserve Bank won't start cutting rates till later. So we end up with the tariffs and potentially higher rates. So I think it's probably either one or the other. But that's seen as more of a drag for our market. So, we're back to what we were worried about before. When is the RBA going to cut? How much more stimulus are we going to get out of China, if any? What is the iron ore price doing? And those things have all been a bit leaning on the negative side this week. Unfortunately, the market is less optimistic than it was this time a week ago in terms of when the RBA will start cutting and by how much it will cut. And by the same token, the iron ore price is down on where it was a week ago. And so all those things are weighing on our market a little bit. But mind you, when I last looked, we're only down 0.2% or so. So it's only a relatively modest decline for the week.
All right, Shane, we know that you're not mean and that you and Deanna go to Tay-Tay concerts together, so all is well at AMP. Have a great weekend, Shane Oliver from AMP.
Bye, Shane. Okay, let's get to the stock of the day, shall we? And that was Bindi. So this is a company that has really gone parabolic this year. We chatted with Mark Gardner from MPC Markets and Adam Dawes from Shaw & Partners.
At least on the Indian market, the revenue, the valuation multiples are significantly higher than what they are in Australia. So we would expect this to just continue going. Whether we would buy it here at $7.50, we would buy small and probably dollar average because this is a ridiculous valuation. But everything seems to be going pretty well for them. They're delivering on everything they said they were going to deliver on. I think that multiple bump once it lists in India, which is still a while away, it's 2026.
All in all, I think it looks a little bit stretched up here. I'd be cautious, potentially taking a little bit of profit around this. And yeah, as Mark said, doing an India IPO, there's more water going the bridge, but it would be a hold.
Nadine, are you suffering from crypto FOMO?
Didn't you ask me this yesterday?
I know, but I forgot.
Said, I don't know if I am, but I know a lot of people out there just wondering if it's too late or if they're being silly by not gaining exposure, at least by an ETF. Some want to dip their toes in, some want to go big. So what we've done is we've assembled a great cast and crew to bring you Crypto FOMO next week.
Yes, so join us. It is free, of course, Wednesday the 20th, and you just need to go to ausbiz.co/cryptofomo to register. All right, let's have a look at the equity market again and see what the after-close leaders are looking like. Auto there up 6.5%.
I do not know what is going on. Let me see what I've got as the best percentage gainer on the 200, and perhaps it's because I've got it listed as Volt Minerals. Interesting. Capricorn Metals, Insignia Financial, 9, and West African Resources, along with Webjet Group. But we've got some other names with actually news associated with it just down the list a little bit.
I'm sorry, I keep doing that to you. I'm breaking the system for Nadine. All right, let's have a quick look at the laggards. Healius there, as we talked about, just that overall healthcare thematic, down 16% today. Mineral Resources was off by 5%. GrainCorp, we spoke to the CEO yesterday, down 5%. Boss Energy also under pressure. Lovisa had a broker downgrade, I believe, from Citi. Its shares down about 4%.
Yeah, just saying it remains cautious on Lovisa. And Healius also held its AGM today. So I'm going to take a little bit of a look through, but I do know that there were quite a few people who are not very positive on Healius because it's selling off one of the jewels in its crown.
Oh, I like what you did there.
Let's go to what's happening overnight. Business inventories, U.S. Empire State Manufacturing Index. We get retail sales in the U.S. and import-export prices along with industrial production.
And looking ahead locally, there's a couple of RBA chats, including Michelle Bullock will speak, Governor Kent as well. We've got an employee earnings indicator, PMI for November as well.
Yeah, and I think I've just been, so looking forward to this weekend that I skipped over those little small caps that I usually love having a chat about. That's all right. We'll do it again on Monday. Look, when it comes to overseas next week, housing starts in the U.S., existing home sales. Interesting if you're one of those that are getting really bullish on James Hardy since the U.S. election. And we do get, some prime loan rates from China. So potentially, I don't think we're expecting anything big coming from that, but we will see. I think it's worthwhile noting some of the companies that have had a really bad week. It's good to look at things with a bit of perspective. Mineral Resources set for its worst week in 3 on the mine closure and all the governance woes. I mean, again, the front of the AFR talking about, some property setups that were favorable to the Ellison family. And I noted as well that Paladin had a really terrible week, worst week in more than 4.5 years. So it's sometimes, worthwhile to zoom out and see what's happening there. Paladin, still a lot of folks that we speak with on the trade, for example, really have it as a pick because of the uranium narrative, but just goes to show that execution always comes into it when you're talking about miners.
Yeah, I think Andrew had a really good chat with James Garish about Paladin. You can find that, of course, on our website. You can catch up with everything. We were at the UBS conference this week. We had CEO interviews. We had the jobs data. So many great conversations. You can find them all online. And, of course, you can get them in our newsletter tomorrow as well. But that does it for this Friday.
It does. One last check-in on the market. We ended for the S&P ASX 200. So that's a SIBO, as we've said many, many times, and I'm sure you know. But the ASX put on a bit more ground, 0.7%, 8,285 as we head into the weekend.
Have a fabulous weekend. Stay safe. We'll see you from Monday, 9:45 Eastern.